and welcome to Bazaar Morning Call, coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Lata Venkatesh, and with me, my colleague Rima Tendulkar. Again, women power. All the boys have gone on holidays, but we are there to take you through the last 2 days of the trading year. It doesn't look like it's a day without cues. In spite of it being the last 2 days, you've got a decent amount of things to move the market if it wants to be moved over the weekend.
Indeed, the last 2 days of 2024, and what a good year it's been, and it also marks the beginning of the new calendar year. And as you said, right, there's lots to talk about, lots of headlines, whether it's on, H-1B visas or the kind of flows, the IPO action. There's so much that we have for you on our show today.
Absolutely. So let me start. My first set of cues are not very much in favor of the bulls. Of course, we put behind a day and a week, that's both Friday and the week that ended on December 27th, were days when we did see a gain. Friday gain of 0.25% and full week gain of about 1%. But the FPI selling has continued. It's about 1,300 crore. I'll come to it in a bit. Let me just finish the Wall Street action. That looks, a bit downbeat for us. The handover queues over the weekend are all negative, as you can see, between 0.75 and 1.5% have been the falls, and particularly on the Nasdaq, the fall 1.5% brought down by two of its stalwarts, Tesla and Nvidia, don't bode too well in terms of positive bullish sentiment. The 10-year yield, which is something which we should always worry about, has actually gone up by about 3 or 4 basis points, now at 4.62. And we must understand this, when you can get 4.62% in a risk-free return in a currency that is not depreciating, the attraction away from EMs is likely to continue, which, ties in with the first thing I said, that the selling continues, 1,300 crores. And the dollar index has been a little weak compared to what we saw through the week. 108.1617 was the better part of the average for the week. It has now come down to exactly 108. We could be a little happy about it, and we saw the rupee also rebound after a huge loss. Went to 85.90 in one fell swoop, and then the Reserve Bank appears, and we gain back about half of what we have lost. But tensions remain actually for EM currencies. There's very little reason to buy. The only thing that might save us is that a lot of people are on holiday. Even this 1,300 crores has come from a gross buy and sell of about 10,000 crores. Yeah. On a normal day through the year, it's about 64,000, the buy and sell together. It's clearly thin, but it is still thinly negative.
Indeed. So now the question really is that we saw a rebound last week, right? So the Santa Claus rally finally arrived, because the week prior to that, the benchmark indices had lost 5%. So after that kind of a drubbing, last week at least, the benchmark indices were up close to about 1%, at least on the headline, at least on the headline front. But the problem is that the Nifty's been struggling below the 200-day moving average. Take a look at Friday's action. So on Friday, the Nifty went up to hit a high of 23,938, but it ultimately closed closer to 23,800 and below the 200-day moving average. So at higher levels, there is some supply which is creeping in, there is selling which is coming in, and we're losing momentum. So the 200-day moving average, which is a level of 23,860, is going to be a crucial resistance for us to conquer on the way up. We're not too far away, just 50 points away from that level, but that's marker number 1. And after that, the markets will watch whether we can conquer Friday's intraday high, 23,938. And a lot of technical analysts we spoke to said that, at least on the immediate terms, the support on the way down is 23,500. Once again, putting on board the supply, in terms of what we had in cash markets. As Lata said, the FII outflows were 1,300 crore rupees. But again, matched, in fact, a lot more than that. The DIIs bought double of that, 2,500 crore in terms of the cash market purchases. And month to date, the FII selling now stands at close to about 10,000 crore rupees. So in terms of the cues for the week, again, it's thin in terms of the economic data. You've got the PMI data coming out, the jobless claims data. But the big one for India will be the auto sales numbers, which will be out on the 1st and 2nd of this month. That said, the IPO action continues to remain hot because we've got 3 new listings today. And the one to watch will be Sonoris Pharmaceutical, which saw a bumper listing of about 94 times. Carraro and Ventive Hospitality, which is Blackstone owned, will also be tracked.
Fair point. I just want to add one more point that's come, just a few hours before we start trading. The statement from Donald Trump that he is going to back H-1B visas. I mean, it's a long and arduous and bitter argument within the Republicans itself, with the conservative Republicans blaming the H-1B visa and Indians in particular for taking away American jobs. And there is, of course, Elon Musk, who's been supporting the H-1B visa. And a tweet from Vivek Ramaswamy kind of seems to have unleashed a bit of a backlash. But Trump comes in and supports it. And look at his actual statement, which will come up for you. The statement itself is that I have many H-1B visas on my properties. I have been a believer in H-1B visa and I have used it many times. It's a great program. Now, this could be a big positive, at least sentimentally.
Yes.
Whether they will actually change the rules, I don't know. But Rima, 70% of H-1B visas come to India. So should we take it as positive?
Yes, because considering that he was a critique of it under his first term and he made life difficult.
Yes.
So in that context, the fact that his stance has changed is a positive on the sidelines. But Trump being Trump, you would still wait for the final guidelines. And two, it's important to note that the Indian IT companies have reduced their dependence on H-1B visas after what they went through between 2016 to 2020. But we'll discuss this with our experts, on the show. But IT stocks definitely on the watch list. But let's get to the equity calls of the day. Chris Wood of Jefferies says an investment in HDFC Bank will be reintroduced in the Asia ex-Japan long-only portfolio with a 4% weighting. He says this will be paid for by reducing the investments in macro-tech developers, L&T, ICICI Bank, Axis Bank by 1 percentage point each. He adds an investment in Siemens will also be introduced with a 4% weighting. As for India long-only portfolio, Chris says an investment in Siemens will be introduced with a 4% weightage by removing the investment in AU Small Finance Bank. The investment in HDFC Bank will be increased by 1 percentage point by shaving the investment in Axis Bank.
Okay, now that looks like a shot in the arm for HDFC Bank. But we have a market to trade and much larger issues to discuss. Joining us is Ed Yardeni, President at Yardeni Research. Good evening to you, Ed. It's really kind of you to take time out on a Sunday evening for you, especially when the country is in holiday mood. Do you think that this US exceptionalism continues? I mean, why would people come and put money in any EM markets when you're getting 4.62 on the US 10-year and the dollar continues strong?
I think the bond market is becoming a problem for the stock market. We've had an amazing bull market here and in India and some other places as well. And I think we're going to have a little bit of indigestion, volatility, cross currents, riptides, whatever you want to call it. I think we're going to have some trouble in the next several weeks going into the new year. And I think at the top of the list certainly has to be the fact that the Fed has lowered the federal funds rate by 100 basis points since September 18th. And over that same period, the bond yield has gone up 100 basis points. So my friends, the bond vigilantes are basically disagreeing with what the monetary policymakers are doing, and that could become increasingly an issue for the stock market.
See it peaking, the bond yields at 4.6 and the dollar index at 108. Is that even on the cards, according to you?
Well, I think that these developments are not surprising to me. Because I did think that the economy is more resilient and was stronger than Fed officials believed back in September and October when they started to lower rates and announced that they would be beginning. It was just to be the beginning of a process of lowering interest rates. The markets now have gone from expecting 6 to 7 rate cuts over the next 12 months to thinking maybe it's only going to be 1 or 2. And I'm not convinced that we really need any more rate cuts. 100 basis points is enough.
Ed, I remember the last conversation, you said that after the banner year that US equities have had, you're forecasting a 10 to 15% correction. But before we get to that in India, just wanted a quick word on this entire H-1B visa feud, which has erupted online. How does it impact? Because Indian IT companies do depend on H-1B visa. So your thoughts?
I mean, Trump backing
it makes a lot of sense to me. If highly educated, experienced workers want to come to the United States, we should be encouraging that, and so that makes a lot of sense. It would be good if we could attract some of India's great talent, but it wouldn't be good for India. So we're definitely seeing a change here with this administration to focusing on what's in America's best interest. And I think that the president and Elon Musk certainly are right about the fact that we have a shortage of skilled workers, of highly educated workers. And if students come here to study and get good grades and graduate, I think they should be given the option of staying in the United States and working here. Increasingly, though, we live in a global world, and there's no particular reason why America's high-tech companies can't hire talent in India and that talent to stay in India. And as a matter of fact, as we know, that's in fact exactly what's happening. So I don't really have a problem with the way things are right now, but I don't have a problem with H-1B either.
Ed, just the words that Trump has used. I have many H-1B visas on my properties. I've been a believer in H-1B, and I've used it many times. It's a great program. Now, he had made educational qualifications and the pay filter higher in his previous term, and it's widely expected by the immigrant population that he may do that further now. Allow immigration, but raise the bar of both education and salaries. Do you think with this quote, we can believe that he won't be so aggressive?
Well, I think what the quote states is pretty, makes sense from his perspective. Though I suppose that when he said that on his properties they hired a lot of people with H-1Bs, he wasn't talking about rocket scientists, which is what Elon Musk is talking about. And again, I think this could actually create, in addition to all the trade tensions that are out there, now we may create the tensions by threatening brain drains from countries that need to keep their brains. Again, India has some really great colleges, universities, great talented, educated people. And I don't know that we really want to start getting into a conflict between the United States and India over attracting talent. Again, technology companies have no problems at all hiring people in India to work for them in India, and I think that's the way it should mostly continue to be.
Okay, just a quick word. So getting back to that 10 to 15% correction that you anticipate, what would be the key drivers for that? One, fewer Fed rate cuts going into this year. What else?
Well, I think what else is the market's had a huge move. We have seen that the move of late has become more concentrated. The breadth of the rally has narrowed significantly. There are too many bulls around. The sentiment is too bullish, and from a contrarian perspective, that's actually bearish. We don't want to see so many people so excited about the upside potential of the market because at some point you run out of buyers, and it doesn't take much to cause that market to go down when you have a lot of new investors jumping in at the top. And certainly if they're jumping into stocks like MicroStrategy or NVIDIA or even Tesla, they're not buying it anywhere near the bottom. They're buying it right at the top. And that makes them vulnerable to realizing that they got the top and makes them vulnerable for selling. We also have a lot of people who have huge capital gains that probably do want to diversify. They want to rebalance their portfolios away from having too much exposure in some companies. And why not take some profits? They didn't want to do that at the end of the year of 2024 because they would have to pay taxes on the capital gains. So I think a lot of them are postponing rebalancing until the beginning of the year. And so I think that may also be a factor.
Well, finally, Ed, what would you be doing with say, an extra kitty that comes to you? would you still be putting our valuations in the US good and you would still be putting it over there? Where would India figure, if at all, in your pecking order?
Well, I think if we get a 10 to 15% correction in the US, we probably will get something like that in India as well. And India, of course, has the challenge of a stronger dollar, has the challenge of the Fed not easing, and the bond yield being even more attractive here. So I would say, if you get a correction, that will be a buying opportunity. On the other hand, if you've got some positions that you've had for a long time and the stocks have done very well, I see nothing wrong with just kind of, grinning and bearing some correction here. But I wouldn't be selling long-term positions. I think we're not looking at a bear market. Bear markets usually are caused by recessions, and there's no reason to expect a recession in the United States or India, for that matter, anytime soon.
One final question then. What about Trump's inauguration on the 20th of June? Do you expect that sorry, 20th of Jan. Do you expect that to throw some curveballs? Because he is expected to sign 25 executive orders on day one itself.
Yeah, absolutely. And I think there'll be a lot of confusion about how they're going to get implemented. I think there'll be a lot of controversy about them, creating more uncertainty. And oh, by the way, while we're mentioning other factors that could create volatility, Treasury Secretary Janet Yellen mentioned that sometime around January 14th, the Treasury may run into the debt ceiling. The debt ceiling has not been enforced since 2023, but just by coincidence, it's going to become enforced again on Thursday of this week. So that's another issue.
Okay, these speed bumps don't go away. But I guess they were tackled last time with a last-minute rapprochement. So let's hope that it'll happen this time as well. Ed Yardeni, it's a pleasure having with you. We've learned a lot from you all through 2024, and we hope to do that in 25. Here's wishing you a gorgeous 2025.
Thank you.
Okay, let's move on and tell you what corporate interactions we've lined up for you on our show today. So first up, 8:30 a.m., market expert Prakash Diwan will join in. 8:40, we will be joined by Rajesh Ravi of HDFC Securities to discuss the trends in the cement sector. 9 a.m., we'll have Mark Mobius, chairman of Mobius Emerging Opportunities Fund, to discuss how 2025 will pan out for emerging markets in India. 9:20 a.m., Manish Sonthalia of MK Investment Manager will be our market master of the day. At 9:30, the management of KEI Industries will discuss their outlook for next year. And following that, Sharad Mahindra, Joint Managing Director and CEO of JSW Energy, will be chatting with us at 9:40 to discuss their recent acquisition and again, Outlook 2025. At 9:50, the management of PNB Housing Finance will talk about the year gone by and the outlook for the housing sector. And towards the end of the show, in our special segment, It's the Economy, Lata will be in conversation with Pranab Sen, former chief statistician, and Mridul Sagar, professor at IIM Kozhikode and former executive director at the RBI, on how changing calculation of inflation will impact interest rates and growth. It's time for a short break, but lots of stock-specific action lined up on the other side. We'll get to it in our top 10 segment. We're looking at IT stocks, JSW Energy, Hitamoto, Deep Industries, Vodafone Idea, Newgen Software, BKG Foods, Utkarsh Small Finance Bank, IOL Chemicals. These stocks could open up in the green, and there's only one lone stock in the red, and that is Ola Electric.
Welcome back. This is the time we get micro on the stock markets. And Rima, I have to start with the IT stocks. Do you think the Trump statement is going to have a sentiment positive?
I think so. It's possible. They're considering that Trump was opposed to H-1B visas. He made the rules a lot harder between 2016 to 2020 under his first administration. It's possible that the IT stocks will react positively. At least it's a sentiment positive on the sidelines. But again, you will wait for the final guidelines. But just that statement once again will come up for you, what Trump said, because there's basically a big feud which has erupted online. So on one hand, you've got Vivek Ramaswamy and Elon Musk, and on the other hand, you've got those Trump hardliners, the MAGA supporters. So there has been a big fissure between the two on this H-1B visa, with Elon Musk and Vivek Ramaswamy backing it. And yesterday, the development is that for the first time, Trump has spoken out and he has backed H-1B visas. So this is the first time that Trump himself has spoken about H-1B visa and taken a side on it, which is why we're going to watch for the IT stocks. IT stocks have had a good run this year, 23% up year to date. It's just that in the last few weeks, there has been a correction from the top of about 5%. One, because the market itself fell from the top. And secondly, there was some concern going into the Q3 earnings that it's not going to be as strong, and some companies may report flat or negative growth. So therefore, some of the optimism going towards the end of the year was shaved off the IT stocks. But today, considering this was a pain point under his Trump, one rule, we'll watch for the IT stocks.
No, I would think that the rupee is a big positive
And the
for
rupee is a big positive.
the IT stocks. They have somewhat taken advantage of it. After all, last week, which were the two sectors that did well, IT and pharma. So there's some advantage. Maybe the sentence and the fact there is thin trading could help the bulls push this sector up. So watch out for that. By the way, MAGA, we just assume everyone knows. Today somebody in my family asked me, "Ye MAGA kya hai?" Make America great again. That is one bloc which doesn't want immigrants. Okay, let's get to JSW Energy. In the news, Vivek, why?
Good morning. That's right. Very attractively valued deal that JSW Energy has entered into. So JSW Neo, which is the renewable energy arm of the company, has signed a definitive agreement with O2 Power. The company is going to go ahead and acquire close to 4.7 gigawatt of renewable energy. This is from a joint renewable energy platform that is run by Equity Infrastructure and private equity Temasek. This particular transaction is being done at an enterprise value of close to $1.5 billion, which translates to 12,470 crore rupees. What is it that the O2 platform actually has? It has close to 2.3 gigawatt of operational capacity, which will come on stream by June 2025. Another 2.5 gigawatt of renewable energy projects, where actually the PPA as well as the letter of award has already been received. The transaction valued at close to 6.9 times EV per EBITDA. This for the entire 4.7 gigawatt, which compares favorably versus a player like NTPC Green that trades in low double digit. Now, the steady state EBITDA run rate that the company has given as far as this particular capacity is concerned is close to 3750 crore at 4.7 gigawatt. Equity IR is greater than 17%. And this particular platform has assets across solar, wind, as well as hybrid. So an attractive development as far as JSW Energy is concerned. Expect some green on the stock today.
Okay.
In fact, the management of JSW Energy will join in shortly to talk about this acquisition and the outlook for the second half of the year. But it's over to Vinny now for some more stocks in the news.
Good morning. So let me start with some of the names coming in from the auto side. We have Hero MotoCorp that will be in focus today. Now, the company has extended its partnership with Harley-Davidson Motors, and this is for Harley-Davidson X440, which is a new variant, and they will be developing and manufacturing this new motorcycle. So we'll be expecting some bit of green coming in for Hero Motor. Ola Electric, on the other hand, let's expect some red here because we have two resignations that have come in. One is the Chief Marketing Officer of the company, that is Mr. Anshul Khandelwal, as well as Mr. Subonil Chatterjee, who is the Chief Technical and Product Officer of the company. Now, they've tendered their resignation. This is with effect from 27th of December. So we could see some pressure coming in for the stock. Lastly, Deep Industries also is in focus. We're expecting green here. Now, the board has approved a fundraising plan of 350 crores. This is going to be via QIP that we're watching out for in one or more tranches is what the company has highlighted. So let's watch out for these stocks today.
Okay. Thanks a lot for that, Vinny. Reema, back to you. Why are you looking at Vodafone Idea and Newgen?
So we're watching for Vodafone Idea because the Department of Telecom, DOT, has waived bank guarantees worth 24,800 crore rupees. So this is a big relief for the company. They've said it in an exchange filing that this is a big relief to the industry per se. For Vodafone Idea, 24,800 crore, and this will help the company boost their 4G, 5G capex. This is for spectrum which has been acquired via auction in the earlier auctions from 2012 to 2021, though there is a shortfall for 2015, and the company is just trying to ascertain the value so that they can make that payment. The stock Vodafone Idea is down 53% year to date. Now, Nugent Software is on our radar for two order wins that the company has had. One is a domestic order win for 24 crore rupees, which is for a period of 6 years. And the second one is an international order of about $2 million for a period of 1 year. So order wins could boost Nugent Software today.
Okay, thanks for that. And finally, Vamakshi, you have some stocks that are in the news.
Well, absolutely. Good morning to you. Bikaji Foods is the first one that I'm watching out for. Keep in mind that the board has approved incorporation of a wholly owned subsidiary, namely Bikaji Bakes Private Limited, with an authorized capital of 1 lakh. And this has been done to carry on the business of manufacturing, distributing and operating outlets for a wide range of frozen breads, cakes, gluten-free products, croissants, etc. So given that development, going with the green for Bikaji Foods. Utkarsh Small Finance Bank is the next one that we're watching out for, because the board has approved a proposal for sale of NPA and written off loans to an ARC. The portfolio of unsecured stress MFI loans worth 355 crores will be sold at a reserve price of 52 crores, which brings the recovery rate to somewhere around 15%. And this bodes well for the company because it helps the small finance bank clear up its balance sheet. So going with the green for Utkarsh Small Finance Bank. And lastly, keep an eye out on IOL Chemicals, and that is because the board has approved a stock split of its equity share of face value 10 each into 5 shares of 2 each. So going with the green for this counter as well.
Okay, thanks a lot for that. Incidentally, Vamakshi, the Utkarsh Small Finance Bank selling off its MFI portfolio would make it second in the list. IndusInd already did that, and I'm wondering if that's a trend. Then we could see some more positives for the others who are saddled with MFI loans. But a quick recap of our top stocks. Stocks with positive news are IT stocks, possibly. JSW Energy, Hero Moto, Deep Industries, Vodafone Idea, Nugent Software, Bikaji Foods, Utkarsh Small Finance Bank and IOL Chemicals. While Ola Electric is the only stock on our radar that's likely to open in the red.
And now it's over to Manisha for a complete roundup of all the action from the commodity market overnight. Manisha.
Well, thank you so much for that, Rima. I'll start with the crude oil prices, where we are looking at prices gaining. Well, the volumes are clearly thin, but the crude, even with the gains today, is headed for an annual decline. The markets have seen some support because the U.S. inventories have seen a decline by 4.2 million. Markets were anticipating a number of 200,000 perhaps. But then there are also expectations of oversupply. In 2025, the China demand continues weak, and the focus clearly shifts towards Trump taking office in the month of January there. Barring crude, most of the metals actually are looking at some recovery today as well. So copper prices, which fell 2% on Friday, are trading 0.5% on the higher side right now. Same is the case with gold, silver, aluminum, zinc, 1/4 to 0.5% of gains across this as well. The only thing that actually is trading weak is the iron ore prices. That one is trading at a 5-week close. We've seen prices decline below $100 a ton, and it's 29% down for 2024 as well. So clearly the ferrous metal is not getting anywhere.
Okay, take that point, Manisha. You know, there's a slight dip in the dollar index, could be a bit of a positive for the metals as well. But of course, year-end short covering could also take over. Take a quick break on that note, and thereafter we are going to have our expert, Prakash Diwan, for the morning to take us through some of the fundamental moves, stock moves that we have spoken about, and what you should keep your eye on in terms of buys. Stay tuned, we are back in a jiffy.
Welcome back. The GIFT Nifty is suggesting a quiet start, slightly lower, 16 points down. Asia too is mixed at the moment. You've got the Japanese markets and the Hong Kong market, that's Hang Seng, under pressure. But again, the cuts are not deep. But on the flip side, you've got Taiwan, Korea, Straits, which are holding up with a positive bias. The picture is mixed across Asia, and the GIFT Nifty is now down close to about 16 points. As promised, Prakash Diwan joins us early on a Monday morning. Prakash, good morning. Hope you had a restful weekend. So first, wanted to get your thoughts in on JSW Energy, because they've made a large acquisition of 12,500 crore, which cements its position in the renewable energy sector. And they're saying this is their largest acquisition since inception. So what have you made of, this latest purchase?
Good morning, Rima. Thank you. So I think the acquisition definitely helps them get a significant leg up in scale. If you compare JSW Energy, that it was a late entrant into the organic growth of renewable portfolio, or the renewable portfolio, as compared to the earlier ones like Adani and all. And this makes it very meaningfully become a peer player in that segment. The acquisition is definitely very positive. They've not overpaid for it. And remember one thing, that companies like JSW, which have the balance sheet strength, if they were to kind of grow at this pace, if the market will like it, they will reinforce the confidence and the conviction that investors have in this portfolio. My sense is you'll probably see a slew of developments which will positively keep helping them scale up, and I'm waiting to hear the management on our channel soon. Essentially, people were worried about the pricing of the valuations. Now, what it does is it gives them scale and visibility for the next 3 years very clearly. And that could probably mitigate a bit of that concern which was there. So from that perspective, it's quite positive. Of course, in the short term, markets could kind of go anywhere, and this could also kind of not be rewarded as amply. But in the near medium term, I definitely feel this is very positive.
Okay. Point taken. Prakash, good morning. Thank you, as always, for joining us this early in what's a holiday weekend for everyone else. But let me give you a blank check question first. What are you buying at this juncture, if any?
So good morning, Lata. Thank you for the best wishes. Yeah, I mean, it's a very difficult situation, to be honest, but I can simplify it by saying I want the next 20 days or 25 odd days till the new Trump administration starts coming into office and announcing what they want. Their intent gets clear, rather than all this guesstimates that are happening around the policy, and then things could be much more clear. And remember, we also have 1st February, which is going to be a very critical budget of sorts, though it's not the first budget of the term, but the first one. Really, last year's budget didn't really make such an impact because of the timing and the circumstances around it. But these two events is what I would like to see past, and then kind of look at buying. But very clearly, the India stories are the ones that you look at, and I'll give you some very clear indicators that are making us get excited about the buying opportunity in the next month and a half, 2 months. One, valuations are getting tempered for sure. It's the IPO market that's really heated up. But if you look at the secondary market, there are a lot of things which have started reaching slightly reasonable valuations. Second, crude is likely to kind of definitely be very, very clearly soft going forward probably for the whole year and beyond. Now, if a 20% dip in crude is something which you can pencil into the positivity for Indian stocks, Indian businesses, it's definitely an opportunity. And the third thing is the dollar seems to be in a stage where it could get firmed up. I mean, USD yields are already 4.6, highs, which you didn't think would happen so soon. But my sense is that you'll probably see a lot of the export orientation in some of the sectors in India, which will do very well, provided they remain insulated from the policy framework which gets announced. So net, it's going to be a few IT names, it's going to be a few CapEx names focused on to exports, industrials. So it's going to be a mix. But right now, to be very fair, we're not buying anything. We've got a lot of things on the watch list, but we would wait for these events to. I mean, it's difficult to time markets, but here's an event which would make a big difference in terms of valuations. So
take your point, it's a binary event. No, I take your point. It's a binary event. But, we just got as overnight, which we were discussing with Rima, Trump's statement backing H-1B visa in what I thought were no uncertain terms, saying that I have H-1B guys on my premises, on my companies. and I think it's a damn good program. So maybe, the influence of Elon Musk and others, and after all, even his strategist, Sriram, AI strategist
Vivek
Vivek Ramaswamy is in that, reducing the government program. There is a Sriram someone who is the AI expert whom he has appointed. So anyway, the point is this unadulterated backing of H-1B visa. Does that move you to buy IT right away, or would you still wait for Jan 20th?
No, so as I said, IT is one of the key sectors that will grow because it does well, it's insulated, it does well because of the dollar firmness. And this whole, reversal in stance from Donald Trump as compared to his last stint, where he actually wasn't, sounding very favorable on the H-1B program, is positive because AI is not going to develop within the US or anywhere else without good skilled manpower. And that is something which they would keep their doors open to. And my sense is companies that are focused on to servicing that segment in whichever way in the value chain, offshore, onshore, particularly now, of course, onshore, there will be a lot of benefits. So small companies, niche companies will definitely benefit. You could start looking at buying them. But yes, the binary event always comes at the back of your mind, to the fore of your mind, saying, you would rather wait for the next 3 weeks and then good. But IT definitely seems very positive from here.
There was a 2024 new American Fortune 500 report which said 46% of the Fortune 500 companies were founded by immigrants or children of immigrants. So, one of the superpowers of America is that they've had great talent. And that's...
Elon Musk is an example. He comes from South Africa.
He's an example of that.
Now almost making policy like a vice president. Okay, time for a break again. And thereafter, the technical experts will also join us. Sudarshan Sukhani and Shilpa Raut will be with us. And Prakash Dewan, of course, stays on. We've hardly asked him all the questions we want to. Back in a jiffy. Welcome back. There's another big news that we should be discussing, news that happened last week or Friday. It was all over the place. Ultratech Cement picked up nearly 9% stake in Star Cement, and that cost was about 850 crore. That clearly indicated that consolidation in the cement sector is in full swing. The transaction is expected to be the first leg of a bigger buy. Of course, one is expecting an open offer sometime. We have Rajesh Ravi, the institutional research analyst of cement at HDFC Securities, with us. Rajesh, good morning. Really kind of you to join us, like I'm telling every one of our guests on a holiday week, so to speak. But this is big news that's happening. The deals are not taking a holiday in the cement sector. How would you read this? Is this consolidation, more price competition? What's the first takeaway?
Hi, good morning, Lata. Yeah, and thanks for taking me on the show. And so, on this deal, what has happened, yes, this is something which was not anticipated because Ultratech acquiring into Star Cement, the block deal data which has come in, they have acquired 8.3% stake from Chamaria family. And what we understand from the data which is available, the Chamaria family in all together owns close to 14% stake in the company. And they were looking to exit the business for their personal reasons. So, this deal may be slightly different than what we saw Ultratech acquiring into India Cements, is what we understand. There are 3 set of promoters within the company, the Chamarias who are partly sold out. Then there are the Agrawals, and then there are the Bhajankars. And what we understand from our earlier interactions with the management, the other 2 are quite committed to the business. And if you see, Star Cement has been doing great in the Northeast market. They are the top 2 players, and they are cash-rich company. In terms of even post their expansions, we don't see any risk on the balance sheet. So they don't require anything per se, and they are doing great in the Northeast market. They've just commissioned their clinker, and they have 4 odd million ton of grinding expansions which are under progress. And Northeast market per se, they are making anything between 1,500 to 2,000 rupee per ton of EBITDA, which is the almost 2x the industry average. So Northeast remains a core market, and they have, the Bhajankas have started this business from scratch, and they know the Northeast market the best. Okay, if I have to put in, so to exit the Northeast market for them, to for now seems to be a it's not a comprehensible topic. But again,
Okay.
from Ultratech perspective, this obviously they would have thought through something. But prima facie, it could be they would be blocking out the Adanis, by acquiring one of the available stake from the promoters.
Okay. So got that. So in your opinion, Star Cements will remain in control of the existing promoters, the other promoters, the Bhajanka family. So it will be majority control. And for Ultratech Cement, it's just a foot in the door right now for
Right.
them with this minor stake. What about the valuations at which the deal has been done? We have a price of 235 rupees per share. How does it stack up versus the other recent deals that we've seen in the sector?
Right. So they have paid close to $100 per ton. If I look at the implied value at the current price, the declared price is 227 rupees, which they have finally paid out to the Star Cement promoter. So that is close to $100 valuations which they have paid out. Now, obviously, this is in line with the value, recent deals we have seen across South, East on an average. But Star Cement, as I said, with 1,500 to 2,000 rupee EBITDA per ton of outlook, and Northeast market remaining a great opportunity market, given that the government focus on defense and the Northeast states developing, and Star Cement and Dalmia remain at the forefront of this opportunity. This asset can easily command anything between north of $150 valuation for sure, compared to sub 1,000 rupee margin outlook for any assets outside of Northeast region. So current deal has happened at $100, but if at all the deal has to go through, if the other promoters were to sell off, I would believe that they would not look at anything below $150.
Okay. Well, Rajesh, just want to know whether this has any impact on cement markets itself. We had one of the cement majors telling us that there's so much capacity underutilization at the moment that there is no price war just because consolidation is happening. Would you agree? And when do you see perhaps capacity getting adequately utilized?
This is an interesting topic because see what has happened is nameplate. There have been a lot of consolidation which has gone through. Last 1.5 year, Ultratech and Adani leading the race in terms of consolidating. But the fruit of this consolidation, in my understanding, will take at least 8 to 9 months to play out, because the recent acquisition, you start with Sanghi Industries, is still heavily underutilized. Thereafter, you saw Penna, and then Orient and India Cements. All these four assets across South and West markets, they are underutilized assets. So the new owners will have to refurbish the factories and start, revamp the utilization to 70% plus. That itself means you have good amount of surplus, new capacities which are coming up. In addition to this, there are almost 40 to 50 million ton of new expansions which are announced per annum by various companies. If you look at the 10, 12 companies, they have announced expansions. So per se, this is the challenging, thing that we are looking at. While we see nameplate capacities getting consolidated, the benefit of the same has not yet been playing out. This financial year is on a slippery slope in terms of margins because prices are not holding up. It's too small compared to the cost inflation which the industry is going through. So next year, second half, if the the top 2-3 players start to think in terms of raising their margins through a better pricing, only then we could see some benefit of the consolidation. However, last point, if I look at from a 3-year, 4-year perspective, yes, the 3-4 year down the line, we will have the top 5, top 7 players commanding more than 65% of the capacities. And from that perspective, the pricing power has to recover, and thereby the industry margin, which is less than 1,000 rupee today, should look up north of 1,000, 1,100 rupees per ton, riding on the better pricing outlook.
Rajesh, thank you very much for joining in. 2024 stood out for the kind of consolidation that we've seen in the cement sector, with the two large conglomerates, the Adani Group and Ultratech Cement, snapping up so many assets in terms of M&A. So now the cement companies, though, will hope for a better 2025, because last year the volume growth was fairly muted for the sector. But it's time now to get a handle on the technical outlook for the markets for the day and the near term. Sudarshan Sakhani and Shilpa Raut are with us for that. Good morning and thank you very much for joining in. Sudarshan, after last week's up move, would you expect the rally to extend itself?
Yeah, good morning. Well, it's difficult to say because the markets are a little confused. We had a very big decline in the S&P on Friday, but the fact remains that we have an identified support point somewhere around 23,600. So far as that holds, the consolidation is expected to break on the upside. Now, the important point is not to look at the direction, but to look at the support levels, which I just mentioned. If this support holds, look to buy on dips and then let the market take over.
Sudarshan, that's very clear advice. You can take us through the stocks that you would trade today?
Yeah, sure. I have mainly buy ideas because the stocks are giving buy signals much more than the sell ones. Alchem is a buy with a stop under 5,400. Eicher Motors is a buying opportunity with a stop under 4,800. And then we come back again to pharma, where Glenmark is a buy with a stop under 1,540. The only intraday short is BHEL, which can be considered for selling with a stop above 240. But the thrust is, so far as the support levels hold, look for buying.
Okay, got that. Shilpa, good morning and thank you very much indeed for joining us. Your overall market strategy would be?
Good morning and thank you for having me on the show. I believe market from here definitely is on the resistance zone. So for Nifty, past move above 24,000 will definitely trigger short covering value towards 24,300 to 24,500. But support also comes at 23,600 zone. So any decline also on intraday basis can be bought with a tight stop loss of 23,600. Bank Nifty, I believe as long as we are holding below 52,000, there is little uncertainty for the index. So as long as we are holding 50,500 on the downside, it can still be a range bound play where 52,000 acts as resistance and 50,500 acts as support. So the range play for Bank Nifty. Talking about stocks, I have a buy on Paytm. Paytm has given very robust volume and breakout above 1,000 and it is sustaining. So the targets of 1,060 to 1,080 with a stop loss of 995 from here. Paytm is definitely a very strong buy. The other buy would be in Jubilant Food. Jubilant Food has also given a breakout above 700. So sustenance here will definitely see the stock moving towards 745 to 750. The third one would be a sell. The sell would be in Cummins India. Cummins India is actually breaking down on a repeated basis and it is not sustaining above 3,400, which is little difficult for the stock to sustain. So from here, I believe levels of 3,150 can also come in. So for intraday, keep a stop loss of 3,350 and it's a short for Cummins India.
Okay. Thanks for that, Shilpa and Sudarshan. We are not done with questions for you, but we have to take that mandatory break before 9 a.m. We are back with more questions for you and for other guests. Welcome back. Well, we still have about 8-10 minutes for the markets to give us its first cues. At the moment, the GIFT Nifty is still implying a slightly softer start. As you can see, 23 points down, and that's largely because the global backdrop in terms of the Nasdaq taking a 1.5% dip, perhaps, is telling on the market. The higher bond yields rising by 4 basis points, 4.62, all that make developed markets, or at least the US, way more attractive to foreign funds. And therefore, I think the slight red start is there. But nevertheless, let's see if we can still get picks within any space. Prakash Dewan is still with us to guide us. Prakash, I know you gave us your overall preferences and your reticence to buy anything before the Trump swearing in. But nevertheless, pharma, I would think, is slightly not that affected. He hasn't gone after it, at least. Is any pharma stock a buy at all?
Oh, quite a few, quite a few. That's one pocket that
Sector that's
probably,
done well.
yeah, that's done well, and it's likely to continue doing well. And look at how the tailwinds have been stacking up, Lata. You had, recently India was allowed to host the ICDRA, which is the conference for drug regulators authority globally. Now that very clearly tells you that the changes that have come about and the disposition that the US FDA has, the MHA has, all of that is pointing towards a very high expectation that India should contribute beyond that 20% to global generics. And my sense is with a lot of new drug discoveries that are in the pipeline, where Indian companies are working very actively, like nifty, saliglutide, there are these very funny sounding names which have a huge potential. I would continue to believe the CDMO market is something which will thrive here at a faster clip than what we've seen, which is just about double digits. It could go to about 18-20% of growth rates going forward, and that is something which investors love. From that space, if you look at some of the companies like what Biocon has done with its arm, Syngene arm, Syngene could kind of start moving into a phase which is commercially very profitable. You could have some of the other larger names which could kind of benefit. You have a small new name like Akum, which is building up a portfolio. Look at how Mankind is changing. I mean, pharma has got so much of choice actually. But yeah, you're right. That's a space we are very, very excited about. And a lot of bottom-up stock picking is also yielding results there, not just a macro top-down kind of a thing. But we'll definitely look at that to allocate much more than what we've done historically in the last few years.
Okay. The fact that you said CDMO, Prakash, is just triggered something in my head. My colleague Vinny actually did a roundup of the CDMO sector itself, a subsector of pharma, obviously. Why don't we just listen into what Vinny has put together on this sector?
2024 began with a bitter pill for contract development and manufacturing organizations, or CDMO players. A muted biotech funding environment dampened the pace of early-stage projects, leaving these biotech firms feeling the heat in 2024. But here's the good news. Positive triggers are emerging on the horizon, and there are clear green shoots that are visible and indicating a turnaround for the sector. The first one is an uptick in biotech funding, signaling a recovery expected in CDMO players. Demand for CDMO services in late stage as well as commercial molecules is also on the rise. Moving on to the third one, we have broad-based commercial contracts in biologics and small molecules that is picking up pace, as well as biologic CDMO demand that has remained robust, and we are expecting the good growth to continue going forward. Nutraceutical manufacturing demand, that is also recovering quite steadily, and now we will shift focus and talk about what the highlight and commentary is coming in from the CDMO players. That's a key one, because what they're signaling is that maybe in the near term, there could be some mixed near-term challenges that we're watching out for, but a promising outlook that is coming in for the medium term. Piramal Pharma is expecting to see early teens growth as the CDMO segment is outpacing the company's average growth. DB's Lab, they remain quite confident in terms of a double-digit growth in terms of revenue. We have Syngene, Laurus, as well as Newland Labs. Now, their commentary is quite similar, because what Syngene is saying that they're expecting high single-digit growth in FY25, but FY26 expected to be stronger. Similarly, for Laurus Labs, expecting a soft growth in FY25, but a good growth from FY26 and onwards. And Newland Labs, also flat growth in FY25, but targeting a 20% CAGR growth in the medium term. Now let's look ahead. The industry is poised for an acceleration in terms of top-line growth. Currently somewhere at 9%. By FY27, 16% growth is what one is watching out for. However, valuations, that's the key concern coming in here, because valuations currently are ranging somewhere between 47 times to 60 times for these players. Following the surge that we've seen coming in on a YTD basis in terms of a stock performance, that was somewhere between 40% to 80% in the run-up that we're seeing, which is outpacing the Nifty Pharma's 34% rise that we saw this year, approximately on that front. Now, finally, here's what investors and analysts need to keep an eye out on.
One is the progress in terms of the Biosecure Act, when it's going to be picked up in the US Senate. Moving on to the next one, we have seen sustained recovery in biotech funding. Will that continue in 2025? That's going to be a key factor. Uptick in RFQ surely is there, but are they translating into confirmed orders? Keep an eye on that, as well as company-specific new launches. What is the trajectory that they have for price erosion in generic APIs is something that is very important for CDMO players. The CDMO sector is navigating a complex landscape of challenges and opportunities that they're seeing. While there are signs of recovery that is quite evident, sustained momentum will be a hinge on factors like funding, legislative support, as well as execution capabilities of these key players. However, could these stretched valuations limit the sector's ability to deliver significant gains in 2025? Let's watch out for that.
Please.
Thank you very much for that. Sticking with pharma and adding a bit of IT to it, if you know, in one of the pink papers today in ET, the top headline reads, Blackstone, Carlyle and other PEs submit bids to unlock Access's majority stake. Now, Access is a healthcare BPO. So it provides services like medical billing, accounts receivable management to all the healthcare providers in the US. Now, this is a space, healthcare BPO, particularly catering to the United States, has become a hot space with a lot of interest. There have been two recent listings. One is IKS and the other one is Sagility, and both of them have had a blockbuster debut. For IKS, the issue price was 13.29. The stock is at 2,000 rupees. Sagility issue price was 30. After a quiet start, it's now at 50 rupees. So Prakash, come in, because there's so much PE interest and now even public interest in this space, healthcare BPO.
So I don't know if you recall the day Sagility got listed, we spoke about it, maybe a day later, 32 odd bucks. And I still feel it's got the right pedigree. It's got the right spread. It covers much more than what an Access does in that sense, in terms of coverage on credit card issuers, hospitals, medical insurers. So this is something which I think has a growth rate which is going to be phenomenal. And with the new administration, this is one area that they would really need to nurture and grow, because the last two presidencies haven't really done much in terms of spending on this or rationalizing the spends on this. So the role will definitely be much more important. You will expect very good contract wins and margin growth, if not just maintenance. I would believe IKS is more of a low float impact that you have on the stock price, but Sagility is well discovered, but probably has much more legs to go in the next couple of years from here. So definitely top pick in this space, Rima, continues to be still very strong. Okay.
Thanks a lot for that, Prakash. But don't go away. Just a couple of more stocks to discuss with you this morning. At the moment, markets, the bell's gone for the 9 o'clock pre-opening, and we're seeing a bit of green on the screen. I don't know how seriously to take it. We perhaps have to wait for the actual market opening. But Adani Enterprises, Bharti Airtel, HDFC Bank, some of these stocks are opening in the green. Tata stocks are opening in the green. Tata Motors and Tata Steel, SBI, Trent. Also, 3 Tata stocks in the top 5. But let's wait and see. HDFC Bank, of course, has got a shot in the arm after Chris Wood has said that he's going to increase his stake in it by 1%. From his India exposure, and reduce for Axis and a few other stocks. So that could be a positive, with people turning positive on the stock itself. But, Prakash, to come back to you, you spoke with some enthusiasm about healthcare companies with the tech backdrop. Likewise for finance, right? Paytm, we must pull up a 1 year of Paytm, or just the year, 2024. This year is one of the top performers with 60% gain in the year. Prakash, any thoughts? I mean, they seem to have got their game back with the voice box.
No, so, actually, this is a miss from my side. I missed on the turnaround on its way up, when things were getting, when they were on a mend. But, this voice box thing is something which they had launched and was likely to be a very good revenue stream for them. But we underestimated the pace at which it kind of, substituted all other solutions in that market. But the core business continues to still be a bit befuddled in that sense. We're not too sure of how it's likely to shape up unless there's an acquisition that sorts out a lot of the issues. But it's been a miss. Buying at 1,000 plus levels, the risk reward might not be as favorable. I mean, do I expect it to go to 2,000 in the next year and a half? I'm not too sure. So, I would definitely want to look at something else. But for those who hold it, it's definitely been a very rewarding journey, and it could continue doing well, Lata, for the next 6-12 months. And of course, the budget will also kind of start pushing consumption again into the micro markets, which is where Paytm will start benefiting if it gets its compliance issues in place.
DAM Capital Advisors, it had a robust debut on Friday, and even in pre-open, it's up close to about 4 to 5%. Now, considering that the other capital markets plays have seen a very strong run-up, how do the valuations of DAM Capital stack up as of today at about 430 versus the peers? And it's also much smaller in size. So should one look at DAM Capital as a capital market play?
I think it's got great pedigree, a very good order book, as an visibility of business going forward, decent margins for this kind of a competitive stream of revenue. But these are IPO post-IPO behavior is something which is always a bit misleading given low floats and the kind of interest that comes in from certain quarters. So I would believe, give it 90 days, let the price equilibrium be decided of sorts. And then you could look at it from a longer-term portfolio. But the wealth managers, so DAM is a bit different because it's an intermediary which is directly involved in the capital market fundraise programs. But if you look at 361 or a Nuvama, these are amazing picks to buy from a secular 5-year perspective, given where India is headed. But again, valuations are a bit stretched because of the fancy and less supply of paper in this sector as a whole, Rima. But on dips, if you really were to add, look at one of the wealth management plays. They'll definitely be very rewarding.
Okay. Prakash, I'm just going to stretch your patience for one last talk because it's IPO time, and Ventive Hospitality kind of caught my eye because hospitality is, like we spoke about Trent and Paytm, the other big gainer this year has been Indian Hotels. Became a 1 lakh crore market cap, and hotels generally have been going through the roof. So how would you rate Ventive Hospitality? I mean, the issue price was at 16x, which is not very expensive compared to the others in the space. Buy on listing?
If you don't have exposure to hotel as a sector, this is a good start. But unfortunately, what has happened is we've been adding a few names to the list. We have Sami Hotels, for example, and we are very excited about post 6th Jan when ITC gives you opportunity to participate in the hotel business. I think that's going to be the next Indian hotels kind of a story, given its strong portfolio and franchise. And the kind of strong balance sheet that comes along with it. Ventive is good as a brand, Lata, definitely, but I would believe the listing will probably not leave you much in terms of headroom to see any appreciation. Of course, long-term things could be very different, but in the short term, you might end up not having to make so much money if you buy on listing day, given the enthusiasm around these IPOs these days.
Okay. Prakash, it's been such a pleasure having you with us all these years,
Likewise.
all through 2024. Thank you very much for joining us. I think we should give you a 31st break at least. Have a brilliant 2025.
Thank you, Lata. Thank you. Bye-bye. Thanks.
Okay. Well, that's the word coming in from Prakash. A bunch of analysis, but overall caution saying that let me wait till Jan 20th before we make our moves. That's what the market also seems to think, because now after starting in the green, it's moved off absolutely as flat can get. The market will go into a bit of a quiet with the pre-opening ending. So let's use that time to hear out how banks have done this year and whether HDFC Bank will come back from the back. Here's Abhishek with the year that was.
Well, 2024 will end as the best time behind for the banking sector. 2025 will mark the test of leadership at lending institutions as liquidity has remained tight. Asset quality has started to see deterioration. Thus, there will be pressure on net interest margin and return ratios. like ROA or return on asset. So incrementally, if you take a look, the loan growth is at 3-year low, and incrementally the credit deposit ratio is at 3-year low too. So even if you exclude the SDFC Limited numbers, the credit growth in this year so far has been one of the lowest in last 3 years, and the CD ratio is also at 3-year low. Now, deposit growth will be a key challenge because government spending needs to pick up for deposit growth to pick up as well. High inflation is keeping customers away from lenders. Managements are saying that corporates are wary of the high interest rates in high inflation scenario. SIP flows continues to be strong from retail segment especially. As per November data, the retail SIP has remained stable and on the higher side. Robust small cap investments have been done by retail investors. Now, what lies ahead? Managements do say that microfinance pain will continue till later part of 2025. Now, with asset quality getting over with respect to the pain in H1 CY25, it's the liquidity crisis that will slow down the loan growth for MFI players. Now, over leveraging is a key concern over there, which will cause huge pain in this sector. Unsecured loans have started to see pain. So many lenders have seen or bled in their Q2 FY25 results asset quality. Slippages are coming in from unsecured lending. We may see that pain continue in H2 FY25 as well, which has been highlighted by higher credit cost guidance given by lenders for the second half of financial year 2025. With growth in unsecured loans being tapered down by regulators and lenders following the same, many lenders who have been focusing on unsecured lending like IDFC First Bank, RBL Bank, small finance banks especially may see pressure on their return ratios as well. So the big area of focus will be the rate cut from the regulator. Inflation has been high and sticky as per economists. One can expect shallow rate cuts ranging from 50 basis point to 100 basis point in calendar year 2025. With lending rate cut being done, banks can see pressure on their net interest margins as lending rates will reduce for them immediately when the rate cuts happen. So while NBFCs may see improvement or stability in their net interest margin because their cost of borrowing from the banks will incrementally reduce, which is one of their key borrowing segment right now. Now, management terms are expected to end in 2025 for these banks like IndusInd Bank, Indian Bank, you have Bank of Maharashtra as well. Also, for Central Bank of India as well as Punjab and Sindh Bank. Over the last few years or 6 years or so, the gross NPA ratio difference between the PSU banks and private banks have narrowed from as high as 967 basis point to about 127 basis point at the end of calendar year 2024 so far. Similarly, the net NPA ratio difference has narrowed from 451 basis point that you saw in 2018 to right now about just 11 basis point in 2024 so far. Historically, this is one of the lowest net NPA ratio difference seen between PSU banks as well as private banks. So from CY 2018 to CY 2024, PSU banks gross NPA ratio has declined from 14.2% to about 3.15%, and net NPA ratio has declined from 6.25% to 0.62%. Private banks, their gross NPA ratio has declined from 4.5% to about 1.9%, and the net NPA ratio has declined from 1.74% to about 0.5%. Will RBI change its stance on lenders? Now, RBI has banned many products or entities in 2024. So, RBI did ban, Kotak Mahindra Bank's onboarding of customers via the digital and mobile customer application, as well as they have placed limits on the credit card business due to deficiencies seen in Kotak's IT infrastructure. Now, RBI had raised material supervisory concern on Asirvad MFI, which is a subsidiary of Manappuram Finance. RBI intends to implement the expected credit loss guidelines from 1st of April 2025 to ensure that there is bank's financial stability, protect depositors' interest, assess the overall risk exposure and accuracy reflecting the true value of bank's loans portfolio. Now, Project Financial, there may be additional provisions over there as RBI has stated in their draft regulations. So, this will be implemented in a phased manner, 2% by 31st March 2025, 3.5% by 31st March 2026 and to 5% by 31st March 2027. RBI has given new draft norms which states to increase the bank's liquidity coverage ratio by an additional 5%. Now, the runoff factor for retail depositors is a key cost, and this will also see that who are enabled with internet and mobile banking, that will see additional incremental over there. So, it may come into effect from 1st of April 2025 and may lead to short-term slowdown in credit and impact the net interest margin of the lenders on the negative side.
Wow, Abhishek, that was almost a PhD thesis on how banks did and will do. Yeah, but I would still think that the Reserve Bank will be a little generous with liquidity to the extent it can, because things have been tightened enough. And that's why I think people are turning a little positive on banks. Hormuz is here to tell us why Jefferies is positive on HDFC Bank and Siemens as well. Hormuz?
Chris Wood has turned positive on HDFC Bank. He has reintroduced his investment in his Asia X only, long only ex-Japan portfolio on HDFC Bank with a 4% weightage, and that will come at the expense of trimming the weightage in Macrotech, L&T, ICICI Bank and Axis Bank by 1 percentage point each. Now, even for the India long only portfolio where HDFC Bank is already a part of, that weightage will go up by 1 percentage point, and that will be done by trimming the weightage in Axis Bank by a similar quantum. Now, Siemens has been in the news all through last week. The stock is down 14% in the last 5 sessions, and Chris Wood has turned positive on that. He will introduce Siemens in the Asia ex-Japan long-only portfolio with a 4% weightage, and he will trim his weightage for that in the Samsung Electronics preference shares and on SK Hynix, and also in the India long-only portfolio with a 4% weightage. That will be done through removing the investment in AU Small Finance Bank. So as of now, both Siemens and HDFC Bank are on Chris Wood's radar.
Okay, thank you very much for that. And that leaves only a few seconds for the markets to open. So let's not get any more, analysis going, but just look at how the markets have opened. It's opened very, very flat. Oh my God. A tinge of red is across. The sensex down about 47. Now down 73. And it's getting a little redder. And the Nifty is down about 21. It still amounts to only a 0.1% loss on the big boys, and the mid-cap is a tad redder, down about 0.25% at this point in time, and the Nifty Bank as well, down about 0.2. Let's see what's the green on the stock markets. Adani Enterprises is in the green, starting about 2% higher. That's the biggest gainer on the Sensex and Nifty. Bharti Airtel, again, up about 0.6. Adani Ports, Nestle India, Hero Moto, ITC. Well, there doesn't seem to be much of a method or any fundamental reason why these stocks are up. Shriram Finance is up about 0.2. Sun Pharma, Ultratech Cement are the other ones that are in the green. Obviously, the red list is longer, and HDFC Life tops the list with a 0.8 cut. JSW Steel, 0.7 down. BPCL, 0.6 down. Tata Steel, JSW Steel, both steel stocks are down about 0.6, 0.7. M&M, HCL Tech, Kotak Mahindra Bank, Maruti Suzuki, Eicher Motors are all starting in the red. Auto stocks generally in the red at this point in time. But otherwise, there isn't much of a method in this red and green because you've got the same kind of stocks like techs are both in the red and in the green. Banks are both in the red and in the green. So at the moment, there isn't much of a method to the kind of gains and losses that we are seeing. Anything specific in the mid-cap stocks, Rima, that you're noticing?
Well, let me start first with JSW Energy, because that started off strong post the acquisition of the O2 renewable energy platform. JSW Energy straight away up nearly 6%. The second big mover is Vodafone Idea. In pre-open, it was up about 8%, but the opening is now a little more tempered, 3% up, after the DOT, Department of Telecommunication, has waived bank guarantees worth 24,800 crore rupees. So positive for Vodafone Idea. Jyoti CNC deserves mention. because there is an Equirus note on Jyoti CNC. They've initiated coverage with an ad rating and a target price of 1450. So that's pushed the stock up. And this month itself, it's seen about a 13% rally. It's one of the listings of this year, I think, and it's had a very, very strong up move. Siemens also starts trade on a positive note. This is after Chris Wood has also increased his weightage in Siemens in his portfolio. So that's up close to about 1%. Outside of that, you've got a Swiggy, a DAM Capital, MobiKwik, an IRB Infrastructure, a Manappuram Finance. These are some stocks which have opened up with strength. On the way down, you've got cuts coming through in Cigniti Tech. Now, the news here is that over the weekend, Coforge and Cigniti, Coforge has acquired Cigniti. Now, the swap ratio was announced. For 5 shares of Cigniti, you get 1 share of Coforge. But at Friday's closing price, the swap ratio was slightly negative, unfavorable for Cigniti shareholders, which is why Cigniti Tech is down 4.5%. For Coforge, also in the red, and that's because there will be some dilution on account of the share swap. Ola Electric is down 2.5%. Because as Vinny was telling us, there have been some senior level exits. The CMO and the CTO have stepped down and the stock is under pressure. Gujarat Fluoro, at one of its key plants, there was a fire which erupted and unfortunately certain lives were lost. So Gujarat Fluoro also weak in trade. But, other than that, you've got, a little bit of softness coming through in Greaves Cotton. But Greaves Cotton has had such a fabulous run. Just till Friday, the stock was up nearly 50% in the month of December. Pull up a 1-month chart of Greaves Cotton. So some profit booking visible on Greaves Cotton, Vishal Mega Mart, Easy Trip, NMDC, Sale, Enviro Infra. Some of these stocks have opened trade in the red. But all in all, it's a quiet start. Before now, the bias is negative. The Nifty is below 23,800, down 30 points. As we've been highlighting, the 200-day moving average at 23,860 will be crucial. But for now, even 23,800 is not holding. Mid-caps too, down 0.2%. The advanced decline ratio is negative. Banks are trying to stage a bit of a comeback. So the Nifty Bank is now back in the green.
Okay. Now, point taken. Adani Enterprises, I was just wondering why the stock is up in the green. I mean, we don't have a reason for every stock, but there is a Business Standard report this morning which says that Adani Enterprises is likely to see a consolidated revenue growth growing at a CAGR of 17.5%, and EPS, net earnings, profit, that is likely to grow by 45.8% from FY24 to FY27. So it's clearly a longer term thing, but I don't know whom they're quoting on this, but that's perhaps giving some kind of a positivity on Adani Enterprise. That stock is leading the list of gainers with a 2.6% gain. Adani Ports in close to with a 0.9% gain. And then, as we read out, ITC doing well. But the Gujarat Fluoro alkyl amines as well closed up a plant. We'll get that alkyl amines as well for you. Those are the stocks that are struggling a bit. But all told, very, very flat at the index level. Let's invite our guest on that note. Joining us now is Manish Sonthalia, the Chief Investment Officer at MK Investment Managers. Good morning, Manish. Thank you very much indeed for joining us. Let's start with an overall question first. Have valuations pared down considerably from that 26,000, nearly 500 to 23,500 odd? Does the market look attractive now?
I would say that another 5 to 7% on the downside would give adequate margin of safety. We are not there just yet because obviously it is all well known that current year numbers are going to be very anemic. 1,075 on the Nifty 50 and 1,250 on an average between FY26 and FY27. I think for a 10 to 12% earnings growth, 20 P multiples won't hold. And broadly, we are going to trade at median levels of 18 P on 1250. That would broadly give you around 22,500. So there you would have the highest margin of safety, and then we'll have the budget, then you'll have the new US president come through and all of that. So we'll pick up from there. But my sense is first we are drifting on the downside, and from there, towards the second half of this financial year, fiscal 26, we should see
So Manish, morning, this is Reema here. What would be your big bets going into 2025? And given the correction we've already seen, about a 10% so far, and you're anticipating a little more on the way down, how has your view on individual sectors changed? Because some sectors have fallen more than the others. So have you changed your portfolio in the last 3 months?
So the big theme to play in India is that the rupee is going to further depreciate. And obviously, thanks to whatever we are seeing on the current account deficit, etc., there is a propensity for the rupee to depreciate even more from the current level. So obviously, IT and pharma would be the ones which would be in the limelight. They will get a boost from the rupee depreciation. Plus, there is also, this Biosecure Act, which will come sooner than later. It was expected sooner, but it now appears that there's going to be some more time. Apart from that, financials, both lending, and I'm also starting to get quite optimistic on the health insurance companies. These look quite reasonable from a valuation point of view. So BFSI and obviously platform companies, both the digital commerce as well as the capital market space. These are the areas where I think there's a high degree of margin of safety in terms of valuation as well as growth. Not so sanguine about, let's say, the capital goods space or the infrastructure, because obviously this will depend a lot on how the government goes about spending. And that has to do with the allocations in the budget, plus the FRBM 4.6% of fiscal deficit by FY26. All of these things, would warrant a wait and watch as far as the sectoral view on these names are concerned.
Yeah, that's a fair point, Manish. All those things should be on your radar. But would you, you spoke about e-commerce and the digital companies. There also valuations are fairly rich. The Zomatos, the Zaggles, anything you pick, the Nykas. Would you still go at these valuations, or are there attractive valuations in that space?
So 2 points of view, Lata, out here. First, the quick commerce and the food delivery space. There's one school of thought which believes that, we have already seen the best of earnings, in these digital companies. Of course, there's also a point of view that the size of the opportunity is very, very big. The TAM is very big. And when we compare ourselves with China or the developed markets, there is still a long way to go. So from that point of view, I think we're still in the bullish camp, and I would believe that there's room for a lot more players, more than just Zomato, but they'll have to prove a lot of things, and competition is heating up. So the quick commerce space, we are leaning heavily on Zomato, just that one name. On digital platforms, fintechs, Paytm is one name which we like immensely, because I think the story out here is from a loss net profit in FY24, all probabilities of this company turning net profit in FY26. So that is another digital commerce company that we are liking. Not too many others apart from these two, but obviously we'll be keeping a watch on the new platforms that have got listed, just to see how unit economics play out and how they are going to report profit growth going into the future. But only these two companies for me in the digital commerce.
No, point taken, actually. Paytm, after the severe reverses they faced in 2023, to come back and become net profit, the market has, of course, rewarded them. It is one of the gaining stocks. Can we just pull up the 1 year of Paytm? There it is. Look at the gain that the stock has seen over the year. If you looked at it in Jan, the stock was closer to about 500 rupees. I mean, it's a huge gain that it has seen in the current year. I wanted to add the other sector that was shining earlier this year, power stocks. They're all smokestack stocks, the BHELs, the JSW Energy, of course, has been doing well, but largely they have been smokestack stocks. Anything you like here?
Only the power financiers, Lata. I think valuations are pretty cheap. Plus, on the dividend yield side, also you will have high comfort. Nothing more on the equipment side. I think valuations, etc., are quite prohibitive. Plus the renewables, I think again we are overdoing things as far as the solar side of things are concerned. Very difficult to really assume that there's going to be so much of an arbitrage between a China and in India. This duty protection that you're giving on the modules and the cells, this is going to last too long. And, somewhere down the line by 2030, of course, the growth is going to come off, and probably the valuation that which some of these companies are trading does not give too much of comfort. So not so sanguine about renewables per se, nothing so on the power equipment side, valuations, etc. Pretty prohibitive across the spectrum, transmission, distribution, generation, nothing out there. And obviously, capital goods, again, is a lot to do with the private capex. Private capex, again, is very anemic, and again, valuations leave very little on the table.
So just a few quick questions, Manish. So since you're a bit cautious over the near term, have you upped your cash levels too? And if you had to give our viewers any 2025 top picks, you spoke about Paytm, you like Zomato, you're leaning heavily into it. Any others?
So by design and by policy, I don't take cash levels, but there is good enough number of stocks to keep as cash proxies, right? So you'll have the large banks, you'll have a Reliance. These are cash proxies. But no, I don't keep cash levels. We are fully invested. As far as the, we can't give recommendations on individual stocks, but I think these four spaces will have ample number of stocks which will relatively outperform. So you'll have the BFSI space, including insurance. And, here again, this is one space which I think the health insurance space starts to look very, very attractive now from a valuations and growth perspective. All health insurance companies, they have been beaten down a lot. Then you have your platform companies, both the capital markets as well as fintechs, as well as quick commerce and all of that. Then you have the IT and the pharma. These would be the highest, margin of safety sectors, according to me, till something changes at the margin. You'll have a lot of developments come through over the next 3 months, and obviously a lot will have to do in how earnings growth play out. But a 10 to 12% nominal GDP growth does not warrant a more than a 12% EPS growth as we speak. So from that point of view, I think these would be the sectors which would deliver more than a 12% earnings growth, and that is why they should relatively outperform, is what I believe.
Okay. Thank you very much. That's absolutely sound logic. Anybody who's able to give you more than 12 is what you would look at. Thank you very much, Manish Sonthalia, for taking us through the analysis of the year that will be and what stocks you would pick. And have a glorious 2025 yourself.
Yes, Lata. Everybody at CNBC.
Thank you. Well, that point is taken, though I would, squabble a bit about this even 12% GDP nominal growth, because at the moment, the real GDP growth for next year looks like more in the 6 to 6.5% range, considering the beating we have taken in the second quarter. As well, you have to add a lower WPI. The inflation number is mostly WPI and then plus a little bit of CPI. So, we might probably just about scramble to the 10% nominal GDP, which can be a problem. But we will know that only on Jan 7th when the MOSPI gives us its advance forecast for the current year. And on that, of course, the budget will build next year's forecast. Well, with that backdrop on the macros, let's get to micros again. Let's invite some of the very good performers of 2024. We have already seen a couple of them last week. Let's focus now on the cables and wires sector. High volatility in commodity prices did impact margins in the second quarter, but the sector is expecting its margin to normalize in coming quarters. To discuss this, we have Anil Gupta, Chairman and Managing Director of KEI Industries, joining us. Mr. Gupta, good morning, and thank you very much for sparing time for us. Well, first up, just take us through this. Revenues were good. I think all of you have given us some 16-17% revenue growth in the current year, 2024. But margins amiss. How will things pan out for Q3, Q4, and the next year's Q1?
Yeah, good morning, Lata. Thank you very much for this year-end show. The year has been very, very volatile in terms of LME prices, especially of copper and aluminium. And, that has impacted a little bit of margins from 0.5% to 1%. But when the prices goes up and then goes down, so overall, I see that if we see overall for full year, I think this will normalize and it will average out. So we expect that the industry will maintain the guided margins and irrespective of the volatility on the metal prices.
Mr. Gupta, can you just highlight for us or just draw out the demand scenario? You, I think, couldn't pass on all the price hikes, but how is demand emerging? Are there enough institutional buyers, big real estate, projects? How are you looking at demand?
See, presently the demand is driven by 3-4 sectors. One is transmission and distribution is very strong. Secondly, solar power projects, solar developers, that sector is doing extremely well. Third, the data centers, which are coming up in bulk. And then real estate, a normal growth. But industry is also coming up, and we have seen capex coming up in new private sector industrial projects. So, but major is driven by transmission and distribution and solar, and the renewables.
Okay. So, what would your dependence be on government-led infrastructure projects? Because we've seen a slowdown in spending. Has that impacted you?
See, I think in our sector, spending has not been reduced, especially in transmission and distribution. I think the spending has been less in cement sector or some of the civil projects or maybe railways, but in electrical sector, in power sector, the spending has not been reduced, and since a lot of RDSS projects under the distribution and transmission, new transmission policy, which was declared 3-4 months back, and all those investments are ongoing.
I take your point. In fact, very interesting. You spoke about how transmission and distribution, data centers, all these are giving you enough demand, real estate as well. But can you tell us private capex? I mean, not many people have spoken very positively about it, but you're saying that you're seeing demand. Can you elaborate on that point?
See, we have seen some of the industries in semiconducting space coming up. And, I know that there is a little bit slowdown in cement and steel expansions, but a lot of expansions has been started in last 2 years. And those projects are now having substantial demands because the cable demand comes in at a time when almost 50 to 60% project is almost over. So now is the time that they are buying cables and, coming. They can't stop the projects which are already ongoing.
Okay.
But what sectors are these? These ongoing projects?
Steel and cement, and these are the two major sectors.
Okay. So you're sticking to your revenue guidance of 15 to 17% for the year and a margin guidance of 10.5 to 11%, or do you think there's scope to revise it?
I think I stick to the guidance on our growth in sales as well as margins. But since earnings season is starting, so it will not be correct to give futuristic guidance.
Okay, so before now you're sticking. And what about your 2025 top 3 priorities, sir? What would your focus area be?
See, presently our company is undergoing massive expansion in terms of capex. We are, putting up a project at Sanand near Ahmedabad at an investment of close to 2,000 crore, and first phase of it is expected to be commissioned by June 25, and the overall project will be commissioned by March 26. So that is going to almost, increase our production capacities by 65 to 70%. And we are also considering further capex. Thirdly, we are seeing a substantial improvement in our exports, especially to United States and Europe. And we will see a significant amount of our sales coming up from exports in not next year, but after that, because we have to bring in capacities first to increase our exports.
Point taken. Mr. Gupta, it was a pleasure hearing you out on how you see the sector panning out. It's almost like how India's industrial growth will pan out. You're such an important sector here. Thank you very much. And here's hoping that your capex plans fructify and multiply. And here's hoping that 2025 is a brilliant year for you.
Thank you very much for inviting me.
Okay, well, that's the word coming in from cables and, the cable sector. And I think that was a positive conversation. They have invested a lot in expansions. But the first 15 or minutes or half an hour have not been really positive for the market. It's a deeper shade of red, a 0.3% cut across all indexes. And the rupee, the dollar, which started a good 6 pies cheaper, and the rupee on the, front foot is now, well, the rupee is still on the, front foot, but it's now only 3 pies cheaper than what it was, the dollar, compared to the Friday close. So all over a bit of a reddening in the first half hour. Let's take a break and come back with more management. We will be speaking with Sharad Mahindra, the Joint Managing Director and CEO of JSW Energy, to discuss the company's agreement with O2 Power to acquire a big one, 4,696 megawatt of renewable energy platform. Stay tuned.
Welcome back. JSW Neo, a wholly owned subsidiary of JSW Energy, has signed a definitive agreement with O2 Power to acquire nearly 4,700 megawatt of a renewable energy platform. We have with us Sharad Mahindra, Joint Managing Director and CEO of the company. Thank you very much and congratulations. First, explain the rationale of the acquisition. What does it add to your portfolio? And why did you choose this route of an acquisition over greenfield expansion? And what were the valuations like?
See, this definitely adds a lot of value to us and to our stakeholders, and which is in terms of that we are getting a very, very high quality asset, and which is close a total at a built up to 4.7 gigawatt of capacity, out of which by June 25, almost 2.3 gigawatt will be operational. So, and apart from that, it also gives us a very high quality value in terms of the people and the skill set which we are acquiring. We are seeing that lot is happening in this space in the country. So the people skill is extremely important. So that is also one of the things which we are acquiring.
Your press release doesn't tell us how much you're spending for it. Can you give us at least a sense of the valuations at which the deal has been done, and how will you fund it, of course?
When we see in terms of valuation, we always evaluate. Two things are very, very important when we evaluate any opportunity, any asset which is available, is build or buy. So when we see the total built up, when we see 4.57 gigawatt, when it is fully operational, and when we see what is going to be the value, and assuming that if anyone has to build, maybe solar we take 4.25 to 4.5 crores per megawatt of build cost. And as we are aware of wind, build of around 8 to 8.5 crores per megawatt. And then we see that what is that turns to for 4.7 gigawatt. We have found this very, very attractive. And also which is operational capacities current and by June 25, which is giving me immediate cash. I think this is an amazing value at which we have been able to get this asset, this portfolio. In terms of funding, as you see that this is going to take, as we have said, that 5 months timeline when the deal will culminate, that time we will be evaluating this. But we have to remember in terms of funding that what we have reported at the close of H1, we are sitting with a strong balance sheet with 5,700 crores of free cash available with us. And also we have to remember and recall that in April 24, when we raised the QIP, this was also a part that any such opportunity comes, we should be ready. So funding is not at all a problem from internal accruals and raising the debt. It will not be a challenge at all, but exact numbers, how we will be doing and all will be, because the net working capital is a dynamic number till we close the deal. So that will be the time when we'll be exactly coming out that how we are going to do, but we are very, very comfortable with our strong balance sheet.
Okay, got that. What is the PPA signed? Is it done for the entire 4.7 gigawatts? And what is the operational part of the portfolio? When does it come on stream? And what is the EBITDA contribution expected from the acquired assets?
See, one is that, of course, this 2.3 gigawatt by June and will start giving us in terms of the EBITDA, which is going to be there, and the free cash, which will be there. And also by 4.7 gigawatt operational, we are expecting the EBITDAs in the range of around 3,750 crores. So which is a very, very healthy returns what we are going to get when we say that what is the per gigawatt or per megawatt, what is going to be the return this asset is going to give. So this is what we are seeing happening with this asset.
Okay, got that. Well, year-wise, the capacity addition target, will give us an idea. Can you tell us the portfolio addition year on year?
See, as we have said, by June, 2.3 gigawatt, and this entire portfolio is tied up in terms of PPAs with utility and also with part of the estates and also in the CNI space. So this entire portfolio is tied up, barring maybe the last, which we have just got the letter of award for this just few days back of close to 300 megawatt of a hybrid project. For letter of award, for which we are expecting that by June 25, we should be in a position to have the tie-up in terms of the PPA with that also.
Sir, if you could just comment on this likely tie-up with LG Energy Solutions. Why this entry into EV batteries? Will it be under the listed entity? And, are you looking at a $1.5 billion commitment on that front? What could be your role and your partner's likely role?
See, this is all we continue to explore the various opportunities which we have been maintaining. And if we find anything value accretive, there are multiple discussions which are going on. At the right time, we will be definitely coming out when there is a definitive arrangement or we reach the stage of MOU. The discussion not only with this one entity, but definitely with various entities, we are continuing with the discussion. And this is in line with which we have been maintaining that supply chain de-risking. Whether it is battery energy storage or whether it is the electric mobility, the opportunities, the way country is moving. But at the right time, we will definitely come back. We are just in the process of stage of discussions with various entities. And then we will find that whichever is the best, then we will decide under which vertical we are going to put this. So it is just at the exploratory stage right now.
Got that. Mr. Mahendra, now let me turn to just our projects outside the latest acquisition. KSK Mahanadi Power Plant, if reports are to be believed, you guys are set to get it. What was your bid amount, capacity, and their contribution to your P&L?
This is something we have been declared the successful bidder. But still, that process is on being through the NCLT route, IBC route. Still, the COC is working on, and we will be in a position to comment on the numbers, on the fundings. Once we are in a position where we get the LOI. So we are waiting for that because it is still a bit away because LOI, then it goes to NCLT for the approvals. And also it is maybe a few months from now, we will be in a position, or once we get the LOI, then I think it will be better position to tell that how we are going to fund that. But as I have maintained, this is a running plant with 1.8 gigawatt, and another fourth unit of 600 megawatt is significantly built. So it is a very good value, but we will be coming out with the details once we get the LOI and the process is at an advanced stage.
Okay, so from KSK, let me go to the wind turbines. Can you update us on that 10,000 crore fund you have raised for what you call WTG manufacturing or wind turbine graph manufacturing? When will the first turbine come out?
Wind turbine, we have signed, as we have said earlier, the technology license agreement with SANY of China, and the manufacturing setup they have already created. It is already there, and the rollout for against our requirements will be happening sometime between January and February of 25, means maximum a month or two, the rollout will start happening. In addition to that, to de-risk the supply chain and to optimize the project cost, we are setting up the blade manufacturing plants ourselves under the technology license from SANY to take care of timely supplies and also to optimize the cost, because we can understand that logistics plays a very, very high cost portion in the blade cost. So we are confident that maybe in 9 months to 12 months time, the blade manufacturing also, we will start for our own captive requirement.
Okay. Mr. Mahindra, it was a pleasure speaking with you, and thank you for giving us a 360-degree perspective on JSW Energy's various activities. You have not spoken just about the current acquisition of that huge platform, but wind and other projects as well, KSK Energy as well. Well, that's the word coming in from the big power guy who's getting just bigger by the day. The markets are still sulking a bit. But Rima, I must come back to you on this IT thingy. I was very excited when I saw the Trump statement, but the top 4 losers today are Infosys, Wipro, HCL Tech and Tech Mahindra. So is it that the market is fearing that talent will run away from India, or why is the reading negative, or am I just overdoing it?
I think for now, it's still a lot more noise. We'll wait for things to settle down. But I think the street is a bit concerned about what Q3 earnings will unfold for the IT sector. But I just want to put on board a bull versus bear on the tech sector. So there is Goldman Sachs. Today they're saying that we're constructive on the IT sector going into calendar year 2025. So they're forecasting a 7% top line growth for next year, which is better than the 4% in FY25 and better than the 1.5% in FY24, which basically means after 2 muted years, they're saying growth will accelerate. Now, this will be driven by pickup in the US economy, so that's 60% of your revenues. Sectors like BFSI, technology, consumer are all showing positive signs. There is positive commentary from the US banks. So whenever, Goldman Sachs has done their, financial services conferences, the commentary from the US banks, which are clients of IT companies, has been positive. Accenture numbers were strong. And even they conducted an IT spending survey. And the outlook for spending going into next year is positive. That said, in the near term, they're saying there could be revenue and margins pressures due to company-specific factors. So TCS's revenues, that's the first one to report their numbers, I think on 9th of January. There is a ramp down of the BSNL deal, so that will impact TCS. Wage hike or pass-through impact on LTI Mindtree. So in the near term, Q3, there could be some pressures, but they expect most of the pressures to be in the street numbers by mid-January 2025. Also, elevated valuations do cap the upside, and Europe is an area of concern. But still, Goldman Sachs is constructive going into calendar year 2025. Investec, on the other hand, says the risk-reward is unfavorable as they continue to see a potential for marginal downgrades when the numbers come out. IT stocks are trading at a premium to Nifty despite lower growth. Deal wins have weakened. The headwinds from AI is still far away, but for now they're worried about the valuations and deal wins. But in the entire IT pack, their preference lies for Zensar and KPIT technology.
That's really neat, the bull and the bear case for IT companies. Well, we have to take a break, do we? Okay. I think a bit of a market check is called for simply because the banks have forged to the front. I mean, at one point in time, we had a deep 1/4% cut on the Nifty Bank. It was the worst performer. And now it is dragging the Nifty up along with its own heft. So that's something I would, really look out for. Banks at this point in time on the front foot. Maybe we want to pull up HDFC Bank. Usually that's one bank which has the capacity to pull up, the entire sector itself. At the moment, Union Bank, Indian, IDFC, Federal, PNB, that is mostly PSU banks and small banks or other mid-cap banks are leading. But look at ICICI Bank, 0.4 up. That can mean a lot for the index as a whole. So it's not really an HDFC Bank pull up. It's actually across the board with the banking sector now moving up to a 0.11. That's 0.11 kind of gain that we are seeing. HDFC Bank is actually in the red, but everybody else is pulling up the index considerably. Speaking of banks, let's get to PNB Housing. PNB Housing, it's expecting, it's already announced that it's expecting its retail loan book to reach 1 lakh crore rupees by FY27. So that's 2 years from now. The company is also intending to increase its non-housing finance book to about 30% by giving loans to those whom loans against property, that is to people who already have a home loan. To discuss this and more, we have Girish Kauski, Managing Director and CEO at PNB Housing Finance, joining us. Girish, good morning and thank you very much indeed for joining us. But first, let me discuss the housing finance space itself. We saw a lot of luxury housing purchases and projects. We haven't heard much about affordable housing, the space where you lend. Your thoughts, what's the demand like? What kind of growth are you seeing in the coming year itself? Let's postpone FY27 discussion for now. How do you think FY26 may pan out?
Well, good morning, Lata. I think if you look at the market, all the segments, whether it is luxury, super luxury, emerging, affordable, I think all are doing well. First, let me talk about affordable. We are seeing very good traction. As of last quarter, we were very close to 3,000 crores. The plan is to get to 5,000 crores in affordable book by end of this year. So we are seeing very good trend, and not just in affordable, even in emerging and in prime. Of course, there are a couple of markets because of temporary hitches. It's slightly slow, but I think market is very good. We are seeing very good.
So is there any geographical guidance with respect to your loan growth in the affordable housing segment as you plan to scale it up?
We are a nationwide presence, so we largely focus on south, north and west. So for us, south is slightly more, followed by west and then north. So it's almost similar, so not much of a difference. But affordable space is one space, which has gained a lot of traction in terms of demand. And we are seeing very good growth in all the three regions, that is north, south and west.
Okay, Girish, you've spoken about at least 30% of your book going as, looks like consumer durable loans to those who have, those who own property or those who have a home loan. Isn't there a danger over there of over-lending? Considering what Reserve Bank has drummed into our ears, why are you so confident that you will be able to do that? If you gave a CD loan to someone who already has a home loan, there is a over-lending fear also, isn't it?
Yeah, Lata, I think we are not into CD business at all. We are only into...
So what is this property, loan against property?
Yeah, both into housing and non-home. Non-home comprises of loan against property, lease rental discounting, and loans to commercial spaces, office spaces, these are small retail outlets. Now, if you look at our entire portfolio, our retail book is 68,000 crores. We plan to take this to 1 lakh crore by FY27. Out of the 68,000 crores, loan against property or the entire non-home book is about 28%. So we are talking about increase by 1%, 1.5%. I think that is not at all big given the mix and the demand in the market. So these are loan against property where the LTV would be quite low. It will be average about 50-55%. And this is for end use. This is only for business end use what we give. So we don't see any challenge in this. And our focus is not really to increase non-home. Our focus is really on home loans. We want to increase our home loans. And you also spoke about the growth for this year. We had guided the retail growth of 17%. As of last quarter, we've already reached 16.2. So hopefully we'll be able to breach that this year. Our retail growth is going to be over 17% this year. And for next 2 years, it should be in the range of 18 to 18.5, 19%, thereby taking the retail book to 1 lakh crore. Out of 1 lakh crore, affordable book will be 15,000 crores. Emerging will be about 25,000 crores, and the balance 60,000 crores will be prime.
Okay. Oh, excellent. You answered some of the questions that were in my head. I was asking you for the arithmetic of this 1 lakh crore. Thank you very much for that. But, let me come back to the point you made about, going into loan against property, especially in the commercial space, lease renting, etc. What does that do to margins? Will these improve margins? As also your ROE, ROA. It's a 13% yield now, right? What kind of an ROA are you looking for now?
So if you look at the entire mix, as I mentioned to you, about 28% is non-home. I think that trend will continue. That is not going to significantly lift the yield. What will increase the yield and thereby increase margin is the segment shift. If you remember 2 years back, we were predominantly into super prime and prime. Over the last 2 years, what we have done is we've done two things. We have completely exited super prime. We are reducing our exposure to prime segment. We started affordable little over 2 years back, and the book will reach 5,000 crores by this year end. That will come out about 12.5% yield. Number one. Number two, emerging we started this year. Emerging, the book will be about 25,000 crores by FY27. This will be at a higher yield compared to prime. So because of segment change, because of control on cost of borrowing, the margins would improve, not because of the shift from home to non-home, which will be hardly 0.5%, that's all.
Okay. All right. Just hold on, Girish. We have the listing of the three companies. We've got Sonoris, we have that hospitality company, and we have Ventive, right?
Ventive Hospitality, which is the owner of Marriott, Hilton. It's a Blackstone-owned company, but the biggest one is actually Sonoris Healthcare.
Yeah, Sonoris Pharmaceuticals.
It had a very strong subscription of 94 times. The issue price was 391 crore, and it's listed straight away at 600 rupees. Ventive Hospitality has also had a good debut. It's about a 12% uptake on Ventive Hospitality. So the issue price would be close to about 17,000 crore rupees. This was a pure fresh issue. It was a 1,600 crore fresh issue. There was no offer for sale for Ventive Hospitality. Carraro India is a bit subdued, at least in opening, but the big one today is Sonoris Pharmaceutical, 50% at open. The company had raised close to about 582 crore rupees by the IPO. Investors lapped it up and they're being rewarded. So 590 rupees at opening for Sonoris.
I'm not surprised because Sonoris was using only 82 crore as OFS.
Yes.
The remaining 500 crore is getting invested in the company. That would have been taken positively, and it is far more, in terms of its PE. And I think 45x, at current valuation, it would be 56 times. Oh no, that makes it a little expensive compared to Ajanta Pharma, which is 43x, and Gland Pharma, 37x.
Yes.
Makes it a little expensive, but I guess getting points for the fact that it is entirely getting invested. Sonoris, excellent listing, 50% higher, in keeping with the very good listings that we have had. We'll come back to these listings after the price settles down somewhat. Girish Kauski is still with us. Girish, thank you very much for your patience. Just leave us with how are you looking at housing demand itself? Has that been very good? You said that you will go higher and higher in terms of the rate of growth, but is there adequate demand?
So there is actually very good demand. All the four segments, super prime, which is super luxury, prime, which is luxury, emerging and affordable, all the four segments, the demand is quite robust. What has happened is that, if you look at Q3, couple of states, for example, Karnataka, there has been slight delay in registration. If you look at MP, there has been some challenge with registration. If you look at Maharashtra, because of elections, there was a bit slowdown in terms of the process of getting the registration done. So these are all intermittent challenges, nothing to do with demand. Demand is quite
Girish,
robust.
okay.
As I mentioned to you, we have not seen from April till now, any slowdown. Actually, we are seeing increased demand in all the segments.
Okay,
And which is why I said that.
Girish, 1 minute. I should have phrased it differently. There has been a liquidity tightness in the market. Raising money has not been easy for banks itself. So it's not any better for NBFCs and housing finance companies because banks have been told not to expose themselves too much to this segment. So are you able to pass on that cost, the higher cost of the money that you raise?
So if you look at last couple of quarters, we've been bringing the cost of borrowing down. And we have enough and more liquidity, and we were able to borrow from banks at competitive rates. However, NCD rates have come down, so there is some exposure to CP. And this year, we've got 5,000 crores from NHB, and that comes at a lower cost. So absolutely, there is no challenge, for us or maybe even to the industry at large. I'm talking about housing finance industry in terms of liquidity. There is absolutely no challenge. Only thing is the bank cost has slightly gone up, and therefore we can see shift towards ECB, we can see shift towards NCD and to a certain extent CP and NHB borrowing. Otherwise, there has been absolutely no challenge on raising funds.
All right. Thank you very much, Girish. That makes us end the year on a high note. The kind of optimism you have injected into the conversation. Here's wishing you a very good, equally brilliant 2025 as well.
Thank you so much, Lata.
Okay, so that's the word coming in from the housing finance company, PNB Housing. Very optimistic on the year that will be and as well on the year that's just ending. The markets actually are now turned optimistic. We still have the IT companies in the red, but the extent of the redness has reduced. In fact, if you looked at the last 1 hour, the ones that have gained the most are Tech Mahindra, Infosys, TCS, HCL Tech. All of them from their lows are up about 1/3% or 1/4%. Let's invite our technical expert, Shilpa Raut is joining us. Shilpa Raut of Prabhudas Lilladher. So Shilpa, after the first 1 hour, what are the trades?
The first 1 hour has been, really rocky, but now we see that there's a turn of events and we see the market turning positive. So I have two buys. The first one would be a buy in KEI. KEI is definitely heading towards 4,500 to 4,600 zones. With a stop loss of 40 to 50, one can definitely stay long here. The other one would be a buy in APL Apollo. APL Apollo is also looking very good with a support at 1,500. Look for targets of 1,580 to 1,620. The same we have recommended in Prabhudas Lilladher today as well.
Okay, thank you very much for that, Shilpa. We will touch base with you later on in the day. At the moment, I'm not surprised. KEI, Anil Gupta's whole approach sounds very positive. Seeing so many verticals, investment in power, in T&D, and data centers, and private capex, all of them are pushing the sector. So KEI on high, even technically, we are given to understand.
And even exports are picking up, including in Europe, not just US. He spoke about exports also, contribution of exports significantly rising once the new fresh capacity comes on stream. We'll get into a break. On the other side, Manisha will join in to talk about commodities.
Welcome back. It's that time of the morning when we have to get the commodity cues as well. Manisha Gupta is waiting by. Manisha, what's the one commodity you think we should track today?
I think you should look at metals today because there is still some volatility continuing into this one, and that is because the dollar index is moving and you have various other pointers to discuss as well coming in. I want you to look at copper prices because this seems to be recovering from its lows. Remember, the prices did decline 2% on Friday, but currently in the Asian markets, we are trading 1/4 to 0.5% on the higher side. So it's back above $4 a pound, and we did see prices go below that as well. So some psychological supports being fixed up there. For the year, though, the prices are up by nearly 5.5%. I want to take you to also on what China has done, where China has pledged nearly, China has said that they will cut import tariffs on certain recycled copper and aluminum raw materials starting 2026 there. Well, there also is concerns. This is about aiming to increase imports, quality imports that is, and expand domestic demand and numbers itself. The second important thing that China seems to be doing is that they have issued 3 trillion yuan in 2025 in special treasury bonds. China also says that that they have allowed the local governments or officials to broaden the investment with key government bonds. So even as we are still waiting for 2025 to begin, China already has come out with various measures, statements, and opening up of markets as well in sense of tariffs also. The other thing is that the copper smelting numbers, well, remember, they have been constantly declining on quarter in the previous year. For this first quarter 2025 as well, the copper smelters have set lower processing charging guidance. If you look at the previous quarter, we were at $35 a ton. For first quarter 2025, it has been put down by nearly 28 to 30% to $25 a ton. That tells you that the copper concentrate is still scarce, and that is the reason you have seen these prices decline. That should be supportive, by the way, for the copper prices. Going forward into the next year, then, the markets will wait out for Trump taking over and the kind of tariffs that puts on. Markets do believe that the all-time highs that we saw in 2025 perhaps is not a possibility for 2025 there. So 10,500 to 10,000 is what the view is coming in for the copper prices from UBS, Goldman Sachs, Citi and JP Morgan. But there are some banks and brokerages looking at prices below 10,000 as well. Currently, we have copper trading at around 9,100. So 9,400 to 9,900 could be an average going forward, is what Bank of America, ANZ and ING kind of banks believe. So it's going to be a tight range for copper in the next year. Markets would want to see on how is the availability for concentrate and, of course, demand coming in from China.
Okay, thank you very much for that comprehensive analysis of metals. Obviously, very crucial for the stock markets as well. Thanks, Manisha. Let's get to stocks again. We told you about that unfortunate accident, gas leak at Gujarat Fluorocarbons. Upasana is joining us with more details on what it might mean to the company. Upasana.
The stock remains in focus today. Well, a gas leakage at company's Dahej plant in Gujarat has led to the death of 4 workers on 28th of December. Mind you that the gas leakage was mainly caused by a valve that released toxic gases, leading to death of workers. As a result of this incident, operations at the plant are temporarily disrupted, is what the company has indicated. And further, company also says that all the assets are adequately covered under the insurance policy of the company. Now, according to the recent government data that was released, the government says that the number of gas and chemical leakage accidents in India has more than doubled to 30 in the last decade, with Gujarat accounting for the majority of the incidents in 2023. So that is one of the key data that we really need to look into.
Okay, thank you very much for that. One hopes that any more casualties at least will not come. That's the sad part. Thank you very much for updating us, Upasana. Let's take a quick break on that note. On the other side is our special segment, It's the Economy. I'm going to connect with Dr. Pranab Sen, former Chief Statistician of India and a well-known economist. Also, Mridul Sagar, former ED at RBI and also formerly member of the RBI's MPC. What we're going to discuss is whether the way in which inflation is going to be calculated is about to change and whether that will have a positive impact on interest rates and growth. Stay tuned, we are back with that very important discussion for both bond markets and stock markets.